Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, August 3rd, 2009. Well, the first trading day of August has gotten off to the start with a bang as we're seeing the indexes higher on the day, basically 1% or so higher. You got the Dow up 99 points, Nasdaq up 23, and S&P 500 up about 12 to 13 points on the day. Now, the interesting thing about these indexes today, folks, you had the S&P 500 clear the 1,000 mark for the first time in quite a while. The Nasdaq, which had traded over 2,000 about a week ago, has gone back to about 2,000, and of course the Dow has approached 9,300, not quite gotten there yet though. So you have a lot of key levels being hit on this market. The question is, how much longer does this last? And that's what we're going to talk about today in the video. Also, we're going to get into some in-depth stuff on the daily charts and the nightly videos tonight in the research center. But the bottom line is that this market has been on a bull tear, and the reason is, and I repeat, the reason is over the last week or two, the dollar, the US dollar, and it's really been a key over the last 3 to 4 months since the bottoming out when the dollar was higher. And the dollar has just collapsed, and it has collapsed hard the last few days. I want to show you the UUP chart. Look at this. This is the chart of the UUP, which is the dollar index on an intraday basis. This is Friday. This is Monday. This fall is a huge fall for the dollar. Absolutely huge fall for the dollar. It may not look that drastic on this chart, but the dollar does not necessarily decline this fast. This is a big, fast decline. And what do we know about Friday and Monday? Well, Friday we had oil soaring. Oil soared on Friday, and guess what it's doing today? Again, rallying to the upside in a huge way to the upside here on oil. And guess what that does? When you have a commodity boom like this, when you have a day or two when commodities just rip higher, you're going to get that type of action on this market. So please understand, this is a dollar rally. All right, it's causing the markets to rip higher here. And again, it's not a huge update. We're up about 1%, but it doesn't matter. The markets are extremely extended, and the fact that it can continue to go up like that on the SPY, and here's the SPY again on the intraday 10-minute, just continue to creep up here. Had a big pop up to a little over 100 to a 100 spot 40 or so, then down, up, down. It's been very volatile early, but as volume got lighter, things have slowed down and just trickled to the upside. I want to talk a little bit about that as well. You guys know we have nailed this again when we're talking Friday and Mondays in the summer, in the dead heat of summer right now. You're going to get that type of action. The traders are on vacation. They take an extra long vacation or on the weekends where they extend it till Monday or they leave early on Friday, and volume will generally be light. Look at this market initially. Gapped up, sold hard, then rallied up, and then sold hard again, and then right here off this pink trend line. By the way, these trend lines for my premium members have been explained in full. We've talked about all the levels on the intraday, daily, and weekly and monthly charts for all the premium guys that have the service. But you can see right here, pulling right to this pink line, and then volume. Look at volume. Right here starts to die out, where volume goes non-existent, and we could be on tap for our lightest trading day of the year. And whenever we say this, and you guys should know, even on the free videos here, when you have a light trading day, generally that will favor the upside. I would say about 7 out of 10 times you will have an up market, maybe even 8 out of 10 times in the summer you will have an up market when the volume is on the light side, and you can continue to see that. Look at the volume here die out. What does the market do? It just gently drifts higher, coming up to a double top area up here where you'll have resistance later today. That's what's going on. But again, why are we up today? Pure and simple, the dollar. Now, the scary thing is, and this is scary, folks, you really have a situation where the dollar continues to decline. Why is it declining? Well, because you have massive amounts of printing of money, of U.S. currencies, bonds, bond sales, and auctions are going off. We had a bunch of auctions last week that went off. Next week we have the 10 and the 30 year and the 3 year next week. So we continue to load the market, have people buy tons of our kind of debt, so we owe them money later on. They give us money now. We're going to pay them later on. What's the problem with that? Well, the more money you create, each of our individual dollars in your wallet right now is worth less. So maybe, let's see. Think about this. A few months ago, maybe that dollar in your pocket was worth a full dollar. Now it's probably worth about 98 cents, 97 cents, 96 cents in buying power. That's the bottom line. That's what's going on, guys. So understand the consequences. Yes, it's fantastic because it's causing commodities to rally, but is it really a true rally right now? Is it really hurting the American public? And that's the other thing you have to remember, folks, is that there are long-term consequences of this. Just like the taxes are going to eventually have to go up to pay for all this debt, guess what? Your buying power is declining. You may not feel it yet, but trust me, when you see prices start to inch up and inflation take hold over the next few years, things will be problematic, and I have to warn you for that now. And again, those of you in the research center, the premium subscribers in the chat room, you guys get this full on all day long, constant updates, picks, hidden gems. I just posted the new hidden gems. It's already starting to show activity in a nice little solid way. We found a real good hidden gem trading below cash value. Fantastic hidden gem, guys, by the way. And I think it has some good upside potential. Again, that's for premium members. And we continue to put out picks on our Pro Trader watch list, on our hot charts and alerts, and call the markets in 30-minute to 40-minute long videos every night, along with many other services, all inclusive of that $49.99 a month fee for the research center. You can visit us at inthemoneystocks.com on the website and see it all now. Now, again, guys, let's talk levels here. You have resistance at double top. You can see how the market's already stalling out a little bit here. Now, that doesn't mean it won't go higher. Why? Well, because it's light volume. Light volume it could be. Now, the interesting thing I'm going to watch for later today, and I want you all to watch, is look at the selling on Friday into the close. 3-bar sell, right? Hard sell into the close on Friday. Well, look at Thursday. Last Thursday, hard 3-bar sell into the close. So that was something that was starting to happen late last week. Are we going to see that again, or is there just no volume behind it today? Do people just take a break from that selling? Do the institutions take a break, and how does that play out? All this stuff is going to be key. We want to look for a change in character. Right now, no change in character been seen. You've seen little tweaks here and there of a change in character with the late day selling, but it's not enough to take this market down when the dollar is collapsing like it is. Remember, this is a dollar-driven market. If that dollar bounces, and now you can ask the other question is there a purpose to keep the dollar weak here so the markets stay up? That could be. Don't think that's not possible. Now, long term, that hurts everyone too, and this is what drives me nuts. And I just do it quickly. I'll talk more about this in the research center. But if there is a concerted effort to weaken the dollar, you're really screwing every American citizen out there, because you're causing prices to go up, buying power to decline, and you're causing, obviously, in the long run, inflation, which is going to hurt even more. There are just so many negatives to a dollar declining for everyone, especially in a time when economic hardships are abound. To have the weakening of buying power, and people don't make as much money right now anyways and losing jobs, so it really is a hurtful thing. But again, the question is, do people care about the markets more? Does our government, does the Treasury, does the Federal Reserve care about more keeping the markets up right now, or do they care about more the consumer, the average American out there? That's all to be discussed, all to be analyzed, and I'll leave it in your hands on that point going into the close. So again, very, very interesting stuff going on out there. The Dow right now is trading at about 104 points higher. Nasdaq up 24.5, S&P up 13.5, as the market is near the double top resistance. These are your lines. These are the lines that have worked. Look at how they've worked all day. These lines are trend line analysis. We go by price pattern and time. Do live play-by-play, calling out stuff in the chat room, and also the research center at night. You will get all the information you could ever want on how to handle these markets. All right, folks, enough said. Have a wonderful rest of the day. Take care.